Hi guys, John Jackson here with Alliance Insurance Services. I want to talk today about something that is a very common question that we get here at Alliance, and that is, what is a deductible? Now, a deductible is something that you have heard before in the world of insurance, right? It's something that everyone knows at least the word. So I want to address all those questions we get so that people can know after watching this video exactly what a deductible is and exactly how it helps them. So let's go and figure it out. So a deductible at its most basic level is the money you pay up front if there's an accident that results in a claim. You have an accident, let's say it's an automobile accident, and you turn it into your insurance. Well, if you have a certain agreed amount, a deductible, on your policy, you would pay that first, and then whatever's left over, your insurance policy is going to take care of. That may seem kind of strange, right? I mean, you're paying for your insurance policy with your premium being the amount that you pay so that your policy is in effect. So why in the world would you pay something up front? That sounds kind of strange, right? But in actuality, it's another way that you can have control over how your policy works and the amount of money involved, either in how much you pay on a regular basis or how much is paid out for the claim. So let me kind of wrap that up a little bit. So think about it like this. With an insurance policy, your insurance company agrees to take on the risk if something happens to whatever is insured. So your car or your house typically are the things we're talking about here. The insurance company is going to cover anything that happens to that. It's going to assume the risk. With a deductible, you are agreeing to still retain a little bit of that risk. So if something happens, you agree to pay a little bit up front. You agree to go ahead and pay $500, which is a standard deductible for an auto policy, $1,000, which is a standard deductible for a homeowner's policy. You pay that first, and then anything left over is covered by your policy. So in that way, what we're talking about here is you agreeing to have some responsibilities still, even though you're paying your insurance company for the policy to cover the rest after that deductible. Make sense? Okay, so now that we've got that out of the way, why in the world would anyone do that? I mean, why wouldn't you go ahead and say, no, I'm paying you, you take all the risk on so that I don't have to worry about it at all and I'm financially in the clear? Well, the reason is because it helps the consumer mitigate cost. If you agree to pay more up front, you have a lower premium. The insurance company knows that you are going to take care of a small amount of money for a claim. So that way, they can let you pay less over time. So your overall premium is going to go down the higher your deductible goes. So it's a way for you to control how much you pay, be it every 6 months, every year, or for a lot of people now, month to month. But what's the best way to use a deductible? You really need to think about a deductible as something that you can use to lower your monthly cost if you aren't going to have accidents. If you're a great driver and you have never turned in a claim, you've never been in a wreck, or at least you haven't been in a wreck in a very long time, then it may be a good idea to go ahead and use that deductible, even to go ahead and bump it up a little bit so that you can save more money, because basically what you're doing is you're betting that you are not going to have an accident and you won't need that. But if you are accident prone, you may want to think about having low deductibles or talking with your agent about what the best way to set everything up so that you can have the lowest cost for the most amount of coverage, which is pretty much the conversation you want to have with your agent at any given time, right? Also, if you have high deductibles, a little bit of financial planning is not going to hurt. If you have something bad happen to you, say to your house, and you have a $5,000 deductible, which is not unheard of in homeowners insurance, you need to make sure you have $5,000 somewhere you can access at any given time. Now, that may not sound like a lot of money to some people, but to others, it could be a shock to the system to have to pay a $5,000 deductible out of nowhere. So, prudent financial planning can really go a long way when it comes to deductibles. And that's it. That's what a deductible is. It's the money you pay up front if you have a claim, and your insurance company takes care of everything after that. Makes sense, right? Piece of cake. So now you know one more thing about insurance. If you have any other questions, please give us a call, give us an email, fill out the form if you're reading this on the blog, and that's it. Thanks so much, and we'll talk to you soon.